Now I want to go through about 10 or a little bit more than 10 examples of these bearish and bullish examples to show you a few examples of what wouldn't be trades and explain the reason why a certain trade would not be a trade, and also to give you a lot more examples of these strategies. So what I want you to do is go ahead and screenshot the checklists that you see on the screen, because I'm not going to be able to have those on the screen the entire time that I'm looking at trades, because I'm just going to be going through markets and looking at trades. So screenshot these if you haven't already written them down, or screenshotted them. That way you can have them beside you. With that being the case, I am going to go ahead and start looking for trades. So we're going to start at this black line here. As I said, I'm going to try to get through about 10 examples of the 50 EMAP strategy. So starting here, we see price pushing above the 50 period moving average. Let me change this to black. Actually, that blue may be hard to see. So we're pushing above the 50 period moving average. We're obviously pushing into new highs. With that being the case, we're waiting on what? At least a 2 red candle pullback. We have more than 2 coming down, so we have a 2 candle pullback. After that, we want to see an advanced engulfing entry. Do we get that right here? Yes, we do. Is this a valid trade? Answer that for yourself, and the answer to that is yes. And the reason is we do have a 1, 2, 3 engulfing candle here. We also only have 1 red candle closing below the 50 period moving average. We also have this coming, the entry candle itself coming directly after the swing low of the pullback from the previous high. So at this point, we have our previous high. Every one of these that goes the lowest at the time is going to be the lowest low, or the swing low. This was the swing low of the pullback until this candle was printed. And this was the swing low until this candle was printed. So as long as the entry candle is or comes directly after the swing low of the pullback, we have a valid entry. And obviously this little green candle did not close above the previous swing high. So with that all coming together, we have a valid trade here. Let's go ahead and mark it up on the charts. We're going to go with an entry there. What's our ATR? 46. If our ATR is 46, then our stop loss is going to be what? Is going to be around 56 pips. So with that being the case, we do not get stopped out. We end up with at least a 1-to-1, and we have a valid entry and a successful trade right here. Let's keep pushing forward here. The next time we can look for a trade is if we get brand new highs according to this high. So even though we come down and push up a bit here, we're not looking for any trades until we get new higher highs. So with that being the case, we can push the market forward. Would this be a valid trade? Again, I'm going to be going over trades that are not right and asking you about it, because I've noticed that that is one of the best ways to teach. In this case, we do have a swing high engulfing candle right here. We also have price below the 50 period moving average. Price also pushed down and created a new low. We have a 3 candle pullback. So what's the problem here? The problem is that the entry candle closed below, let me move this, actually make it a little bit bigger, the swing lows. So if the entry candle closes below the swing low, we have an invalid pattern. Next up, well, we have a new low here. Do we have a 2 candle pullback? 1, 2. Do we have an engulfing candle? Yeah. So is this valid? No, it's not. Why is that not valid? Because the entry candle did not directly follow the swing high of the pullback, and we don't have an advanced engulfing entry. So although we did in fact get a new low compared to our previous low and a pullback of more than 2 green candles, that's not all we need. We then need to see one of our advanced engulfing entries, and we need the entry candle to either be or directly follow the swing high of the pullback. So for this to be valid, we either would have needed to see this candle do this, because in this case we have a 1, 2, 3 engulfing pattern, and number 2 is the highest high of the swing high, or we would have needed to see this, because in this case we have a swing high engulfing candle and our entry candle is the swing high. So let's keep moving here and see what we find as we push up. Would this be an entry? Hopefully you said no. Again, we do have a brand new high. We do have a 2 candle retracement. What's the problem here? Again, our entry candle closes above the bodies of our swing high. That does not give us a valid trade, although it is a 1, 2, 3 candle. Again, as this candle closes above the bodies of the previous swing high, then we're not in a valid entry situation and we don't have a valid entry. As we keep pushing forward, is this a valid entry. We push down more than 2 candles after creating a new higher high. We touch the 50-period moving average, but don't have 2 red candles closing below it. Everything looks right. But if we zoom in a bit on this candle, this is not an engulfing candle. The close of this candle is below the previous open. That can't be the case, right? We would need this to be an actual engulfing candle. For that reason, this is not valid. It would be, though, if it would have been an engulfing candle. Pushing forward, let's go ahead and see if we can find another opportunity. Now, this is one I get a ton of questions about. Would this right here be a valid entry? I'm talking about this green candle. No, it would not. Let's think about our rules for a second. We do get a push up into a higher high. We do get our 2 candle pullback, 1 there, 2 there. We do get a lower low engulfing candle, but is this a swing low engulfing candle? Well, think about the way that's worded. In order to be a swing low engulfing candle, wouldn't it need to be the swing low of the pullback, right? So because of the fact that this is not the swing low of the pullback and the previous candle is not the swing low of the pullback, in this case, we would have had a 1, 2, 3 engulfing. In this case, we would have had a swing low engulfing candle, but in this case, we have neither, and this would not be a valid trade. So we don't have a setup there. We'll continue looking here. What about now? Hopefully you said this was a valid trade. We push up into brand new highs. Let's actually make sure we have new highs here. If I put a horizontal line on the chart, again, we just need new highs. We do not need a candle to close above that high. We just need a new higher wick. So with that being the case, we do have a new higher wick. And now that we see that new higher wick, we get a pullback of how many candles? 1, 2, 3. They're separated by a green candle, but does that matter? Nope, not at all. As long as there's more than 2 green candles in the pullback, we can look for an entry. So in this case, we have a valid entry right here. Why is that? Because we get a swing low engulfing candle after this pullback. All of this happens above the 50 EMA and after a new high. So with all that coming together and considering we don't close above the bodies of the swing high with our entry candle, we have everything we need to call this a valid entry. And the ATR is 32 here. What would be our stop loss? Well, if the ATR is under 40, any number under 40, we add 5 for the stop loss. So we have an ATR of 32. That means we're going to go 32 plus 5, which is 37. And we're going to look at this and go, holy shit, we lost the trade. Well, that is a part of it, guys. This just happened to be a losing trade. Now, next up, something that's probably pretty confusing to most of you who are just now getting started. And that's the whole reason I wanted to go through and do this. Do we have a valid trade right here? No, we do not. Let me explain why. So in this case, we have a high right here. We have our pullback to the 50-period moving average. We just have a bit of consolidation here. We have another pullback that touches the 50-period moving average and gives us this engulfing candle. But before we can find another trade, we need to see a new high above this high. So we can't trade that. And this would have to be the swing low of the pullback if it was a last chance entry. So with our last chance entry, we can enter after a loss as long as we touch the 50 EMA. But remember, we have to follow all the other rules as well. As in, for this to be an entry, this would have to be the case. This candle, the candle of the entry, or the candle before the entry, needs to be the swing low of the pullback from swing high down to swing low. If that's not the case, then we do not have a valid entry. Let's take a look at a few more examples here. Pushing forward, we come up, break into what? New higher highs. We then get a pullback. We then get a nice 1, 2, 3 engulfing candle. Is this a valid entry? No. And why not? Because we have 1, 2 red candles breaking below the 50-period moving average, which means what? That means we need to make new structure highs in order to start looking for trades. So after this, we cannot look for trades again until we break into new structure highs. With that being the case, this would not be a valid entry either. Let's take a look at the rules. The rules are our entry, no matter what, needs to be the lowest swing low of the overall pullback from here to here. Is this the lowest swing low? No, it's not. Not at all, right? So it would not be a valid entry. We break into new highs now. What about this candle? Here we go. Valid or not valid? That one's valid. You're absolutely right. So With this one being valid, let's go ahead and go through all the rules. We have a push up to a brand new high. We then have a pullback of over 2 candles, right? It's separated by a green one, but does that matter? Not at all. We have a pullback of over 2 candles after a new high, everything happening above the 50-period moving average. We then get a 1, 2, 3 advanced engulfing entry, which comes directly off the swing low of the pullback from swing high to swing low. And the entry candle stays below or does not close above the bodies of the swing high. All of that means we are ready to enter the trade with a stop loss of what? If it's 27 pips, the ATR of the entry candle, then we're going to add 5 to that. And we're going to have a 32 pip stop loss. With that being the case, as you can see, we easily hit targets there at a 1-to-1. Let's take a look at just a few more examples. Hopefully by now you're starting to get the gist of it. We haven't had that many bearish examples, but it's just the same exact thing flipped upside down. That shouldn't be too hard to comprehend. Here we go. Do we have any entries right through here? Take a look at this area and tell me if we have any entries. An easy way to do this is if this is our swing low and our entry candle has to be the swing low from here to here, then is there even a way we have a valid entry? No, because we've only had one red pullback and this is not an advanced engulfing entry. So there's no way we have an entry here unless we have a candle that breaks below that low and also is an engulfing candle. So unless that happens, we don't have any way to even have an entry. So in this area, we got no entry. Pulling forward here, we have any entries here. Point out whatever you think would be an entry here if you have something you think would be, and I'll explain why there are no entries here at all. So as we pull down here, again, we're looking at the swing lows. We're waiting for one of these swing lows to either be red followed by an advanced engulfing entry. This is not one of them. Or to be a swing low that's green and is an engulfing entry. This is not one of them. But that's what we'd be waiting on as we're pushing lower. None of that is happening. And even as we break down right here, that happens right here, but guess what's wrong right there? We have 1, 2, 3 red candles closing below the 50-period moving average. So with that being the case, we have a not valid trade. Would this be valid? No, it would not. Remember, we need our entry candle to either be or directly follow the swing low of the pullback. This is the swing low of the pullback until this candle right here. So with all that being the case, we have no entries right there. Let's take a look at just a couple of other examples. So this is going to be the last bullish example we take a look at. Find the entry on the screen. Pretty easy to point out. It kind of stands out like a sore thumb. It is right here. And why is this a valid entry? Pretty easy to remember at this point, I would imagine, but we have our new higher high. Does this pullback consist of more than 2 red candles? Yes. Is all of this happening above the 50-period moving average? Yes. Do we have an advanced engulfing entry? A 1, 2, 3 engulfing right here. Can we ensure that only one candle closed below the 50-period moving average? Yes. So all of this coming together would mean that this would be a valid bullish trade, and this is what that would look like in terms of entering this trade. 52 means we have a 20 plus ATR pip stop loss, because anything between 50 and 200 is 20 pips plus the ATR. So at the 52 range, that means 72 would be our stop loss. And 1-to-1 reward to risk ratio right there. Now, this is how our trade would have played out. That's going to do it for the bullish examples. I feel like I've went through enough bullish examples for you and even shown you a ton of things that would not be correct trades. Hopefully that clears all of your doubts up. And with that being the case, we're now going to move on. We're just going to take a look at a couple of bearish examples. Again, it's just exactly what we've discussed, flipped upside down. So we won't take a look at nearly as many bearish examples, but let's go take a look at a couple anyway, just to ensure you get the concept of flipping the rules upside down for bearish examples. So looking at the chart in front of you now, I want you to spot out all the entries that you see. Pause the video if you have to, take a look at the chart, really look into it, and I'm going to point them out after you do. Hopefully you've done that. Now let's take a look at the chart, and let me ask you this. Would this be a valid entry? Well, we have a new low right here. We have a 2 candle pullback at least, and we have an engulfing candle. What's wrong with this entry? The engulfing candle is not the swing high, and also the candle directly before the engulfing candle is not a swing high. We need that to happen. We have to have that in order to have a valid trade. Since that doesn't happen here, we have no valid trade. Why is this not valid? We have our swing low, our pullback up, but we have two green candles closing above the 50-period moving average. Therefore, that would not be valid either. Now, do you spot a valid trade on the screen? Because there was only one. I tried to trick you guys a little bit. There's only one valid trade in all of the data that you just looked at, and it's right here. We have a push down that obviously broke into new lows. We're still obviously below the 50-period moving average. We then get this 1, 2, 3 candle pullback followed by a swing high engulfing candle. Not a prettier trade exists. So in this case, at least not for the pullback strategy. So in this case, we have a valid entry for a short trade. The ATR of this candle is 48. With that being the case, we have what as a stop loss? We have a 58 pip stop loss because between 40 and 50 is a 10 pip plus ATR stop loss. And we're going with a 1-to-1 at the moment. So this is what that trade would look like. Let's see if we can find one more example of a bearish trade before we end this section of the video. So here is a, no, actually, let's see how good you are at this. Is this a valid trade? Hopefully you said no. Here's the reason. We do have a push down to a swing low from a swing high that breaks into new lows. We do have a pullback and only one candle closes above the 50-period moving average. This candle is the swing high of the pullback, but what's the actual problem here? If all that's coming together, well, the problem is here's the swing low, and there's the bodies of the swing low. Our entry candle closed below the bodies of the swing low. So that's one of the nuance rules you need to look out for, and it's something that I see all the time people have questions about, so I'm trying to make sure it's really, really clear in this video. Now, at this point, hopefully you've already spotted the valid 50 EMAP bearish entry. It's right here. We have a push down, breaking into new lows, a pullback of way over 2 candles. It's all happening again below the 50-period moving average. Then we have a swing high engulfing candle right here. This trade setup would look something like this. The ATR is 37, so that would be +5, which is 42. And then we would have a 1-to-1 reward to risk ratio for the examples we're doing right now. So that's going to do it for this video. That was some bearish and bullish examples. Hopefully it gave you a very clear understanding of how we're going to be trading this strategy. In later sections of the course, we're going to be doing a ton of backtesting of this strategy together. I'm actually going to be backtesting it with you to show you even more examples and again to ensure that you understand how to backtest this strategy yourself. But for now, we're actually going to move on to our next strategy that I call the 20 EMAR strategy. So let's go take a look at the rules for that right now. I'll see you guys there.